Hi everyone, welcome to Single Values. So today we're going to talk about Airbnb because this is kind of one of those stocks that we've just been waiting for forever. We've kind of got like little snippets that was going on IPO for probably a couple of years now. So yeah, no, it's finally nice to actually see it come onto the market. Of course, why is everyone excited? Because it's a big name. Everyone kind of sees it as a big growth company. It's a name that everyone knows, so they're kind of like, if we invest in the big names, we can trust it, it's reliable, and it's going to make us some huge profits over the long term, or at least even the short term, as we hope, because there's going to be so much hype, it's going to be pushed up, we're going to buy it, we're going to sell it later, and then, yeah, we're all happy, right? So, we're going to look into these numbers and we're going to see how true these things are. So if we look at what Airbnb wants to do, firstly, it wants to come onto the market and it wants to raise $3 billion. It is coming onto the market at a 30 billion valuation, so it's roughly raising about 10% of its market capitalization. Though when it comes on the market, I don't think you're going to get it at 30 billion. It's usually never possible to get it at the IPO pricing unless you buy into the IPO itself, which usually a lot of people don't do unless you have the access to those facilities. So if you can't buy into the IPO, the big question is, how much is this company going to come in and open at? Because usually the open price is what most people, especially retail shareholders, are able to buy at. I thought this prospectus was pretty good. It highlighted some pretty important information, which I'm going to go through today, and it's going to give you some time to consider because IPO is in December, so that's still a while away, though not that long in the scheme of things. Time just passes incredibly quick, especially this year for some reason. So there's a nice little story around this that I think everyone should get an idea of the origin of the company. I'm just gonna do a little storytelling for the next minute or two. Feel free to skip it if you don't want the story. So Airbnb started with two designers trying to solve a problem, how to pay their rent. So don't we all have that problem sometimes? The year was 2007. Brian and Joe, two of our founders and friends from design school, were looking for a way to cover the cost of their San Francisco apartment. That week, they saw an opportunity. An international design conference was coming to town. Every hotel was sold out. They quickly created a website, airbedandbreakfast.com. So now you're kind of getting an idea how Airbnb, how the name kind of comes together with the hope of renting out earbeds, so Airbnb. So it starts to really click, right? How the name and the origin comes together, and I think that's really the beauty of things. How seeing these ideas come together. So they thought they'd rent out earbeds in their apartment to attendees of the conference. Three designers, Michael, Kat, and Amol, if I'm pronouncing that right, took them up on their offer and became the first guests of Brian and Joe, our first hosts. When Brian and Joe told people what they were doing, they thought the idea sounded crazy. Strangers will never stay in each other's homes, they said, but something unexpected happened that first weekend. Brian and Joe treated their guests like old friends from out of town, connecting to them in a unique slice treating them to a unique slice of San Francisco that they could never have experienced on their own. Michael, Kat, and Amol came as outsiders but left feeling like locals. Their experience left Brian and Joe feeling something special too, the excitement of sharing the city they loved and seeing their guests form a deep connection to it. Brian and Joe started thinking maybe there were more people like Michael, Kat, and Amol who would like to travel this way, and more people who would like to host this way. The These are the ideas that Airbnb was founded on. In 2008, Nate, a software engineer, joined Brian and Joe. Together, these three founders took on a bigger design problem. How do you make strangers feel comfortable enough to stay in each other's homes? The key was trust. The solution they designed combined host and guest profiles, integrated messaging, two-way reviews, and secure payments built on technology platform that unlock trust and eventually led to hosting at a global scale that was unimaginable at the time. So you can kind of see, like, I love these origin stories, and I highly implore you to go read it yourself. It is very interesting to always read about these things. But yeah, like, I just love reading a story and just seeing how it evolves into something so big as it is right now. So we look at it now, 13 years later. Today, the idea does not seem as crazy after all. More than 4 million hosts now offer everything from private room in their home to luxury villas, from one night to several months at a time. Hosting has expanded from homes to now include experiences that can be taken in cities all over the world or even online. In more than 220 countries and regions around the world, our hosts have welcomed over 825 million guest arrivals and have cumulatively earned over $110 billion. Airbnb has become synonymous with one-of-a-kind travel on a global scale. Looking back over the past 13 years, we have done something we hope is even more meaningful. We have helped millions of people satisfy a fundamental human need for connection, and it is through the connection that people can experience a greater sense of belonging. This is at the root of what brought people to Airbnb, and what continues to bring people back. So like, when we read that sentence, we're kind of seeing the essence of what this really means. Like, I mean, let's not ignore the fact that firstly, Airbnb is significantly cheaper than a normal hotel, and also the fact that you just get more of a comfortable experience because it's facilitated by the owner of the property. So they take care of you in a better way. Well, at least you hope, because it's one person. Whereas with a hotel, you have like a whole bunch of staff. Some of them probably just don't want to be there in terms of their job, or they might not be that focused on attention or details because they're there every day. And they're getting a wage. They're not getting the full, amount that's coming in. Whereas with the property owner, they do get the full amount in a sense, after the deduction of the fees, of course, and they're really highly invested in your experience. Whereas a hotel may not always be the case. Of course, if you pay, a higher price, then you do get the service. Of course, with a hotel, you do get more in a hotel with that higher price tag. But at the end of the day, if you, as they say, they're all about integrating local people with people traveling from other places, and it kind of facilitates more of a local experience, which some people might enjoy even more as well. So that may not always be the case if you like your privacy, because sometimes you might stay in a home with too many other people, whereas you might just prefer the comfort of your of a hotel room. But generally, what sells to me is that price point is definitely a winner. And also, during busy seasons when hotels are just fully booked and there's no more accommodation, then someone else's home is a clear winner in terms of finding a place to stay. So you can kind of see the selling points of Airbnb. So you might have thought their business was impacted, and it was heavily impacted. I think these are the numbers that I wanted to show you. So out of the gross booking value, we can kind of see these numbers. 2017, they're around about 5 billion, and in 2018, they're in the high 7 billions. Except quarter four has just shown to be usually the slower period out of all the years. So we kind of look at 2017, 4.8 billion in gross booking value, whereas the rest was over 5 billion. And in here, same thing, 6.5 billion quarter four here, whereas everything else was above 7 billion. And same thing for 2019, that was 8.5 billion, where everything was much more above 9 billion, even 10 billion for quarter one. But of course, 2020 has been one of those stories where Airbnb hasn't succeeded, it hasn't gotten as much bookings as it would have liked, and we know the reasons why. So, yeah, like people just aren't traveling, people aren't staying in the accommodation, and yeah, like it just makes sense that that is the case currently. Though in quarter 3 they have done really well, particularly bouncing off a really bad quarter 2. Quarter 2 was only 3.2 billion in gross booking value, so that's really really low in the scheme of things. Though quarter 3, which is traditionally a very strong quarter and a very profitable quarter, as we'll see right down here. So if we can see the quarterly adjusted Ebitda, if you don't know what Ebitda is, it's earnings before interest, tax, and depreciation amortized. Which, yeah, like as you can see here, 2017 quarter 3, 233 million in profit. 2018 quarter 3, 360 million. Quarter 2 was a slight profit too, though in most years, as you can see here, only quarter 3 generally generates a profit. 2019 again profitable, 313 million, and this is operating profit, of course. And then in 2020, the worst year this company's probably had in terms of a decline, they made even more profit, though that wasn't a case of firing like 1,800 of their staff. So it was quite a lot of their staff. It was like a quarter of their staff. So now this operation is very lean, and you can kind of expect next year when things bounce back even stronger, that this company is going to be, very much within that break even or even very profitable situation, because the operation has become even more lean than it used in the past, because they didn't have like companies kind of go through this phase where they think of ideas and they kind of grow as much as they can, and when they don't think they can grow as much as they can, they put in traditional CEOs, they cut costs, and they focus on making a profit. And then that's usually when the founder leaves as well. So in this case, the founders that actually had to make tough decisions, they've had to fire a quarter of their workforce, and they've had to, basically buckle down, and not think about growth as in that sense. Of course, they've still got really nice ideas coming through, though they still have to make tough decisions. And it's, in a way, it's building the company to be much, much stronger than it would have been if things like this did not happen. So even though it's not an ideal year for them, I feel like this company has come back in a really strong, much stronger way than it was, at the start of the year. And it's really showing that resilience that's going to be the core of this company going forward. They're going to think about these things in a more engaged sense, in a more sense that, hey, these things could happen again in a different form. So we should always be prepared, and we should always know how to engage in this, so that this company isn't at the biggest threat when these things happen again. And to come back that strong and do 500 million in operating profit is very impressive. Of course, these are probably the numbers that you want to see. You want to see the revenue numbers, and the revenue numbers is 919 million for 2015, and then they did a really good increase in 2016 by going to 1.65 billion. Then in 2017, they continued that nice increase to 2.56 billion on that. Then they've continued to 2018, which was 3.65 billion, and then for 2019, they did 3.69 billion, and then for the 9 months. So for 2019 as a full year, I should rephrase that. They did 4.8 billion for 2019 in a full year, and then here we can kind of see 2 years where they've just done the 9 months, because we've only gone 9 months in this year. And you can kind of see for the 9 months in 2020, they've only got done 2.5 billion, which is significantly lower than the 3.69 billion that they did for 2019 for that 9-month period. So it just shows this year the value, there just hasn't been that many bookings. But again, that makes sense as well. I think the business is going to bounce back quite strongly next year, so I wouldn't really worry about this year. I'd just say this year's a write-off. Don't worry too much about it. next year's where they're gonna really get the game together. People are going traveling, people are staying in accommodation again, and things are going to lift off again. But if we look at the 2019 numbers, 2019 numbers was showing about, let's see, I'll just work out the growth. So, for me, that's always one of the more important parts. So they were showing about 31% growth. So 31% growth wouldn't have been too bad. If they grew at like 25% from the 2019 numbers, you would get about a 6 billion revenue number, which I think they would have gotten this year if it was a normal year. So I think they'll get 6 billion probably in revenue next year, assuming things can return back to normal. And yeah, I think the business in general isn't too bad. If we look at the losses, net loss was 100 million for 2015, 135 million, and then it did increase to 147. It decreased to 70 million, then decreased to 16 million in 2018. Then surprisingly jumped up a lot in 2019. It could just be the chasing growth because like cost of revenue did jump up significantly. Same with operations and support. But again, this is a company that just has to build on top of what it has. And I think, we did see that situation where people kind of lost trust in the company through like if you rent out your property and it gets trashed, or you don't receive the money, or people just like there's not a proper platform backing them, and also they've had to think about how to release new products and really invest more money in innovation. So it does make sense. And also sales and marketing is up a lot, from 1.1 billion to 1.6 billion. So in 2020 they've actually slowed that down significantly. Because 2020 they only did $500 million, whereas same period for 2019 they did 1 billion. Of course, these guys, like I think they kind of saw that they could just like keep pushing that, but of course they realized that it was a really bad idea, given that 2020 came around and this company was quite strapped on cash. So I think they've learnt that maybe marketing like this isn't always the best idea if you're going to run out of cash. But overall, not too bad of a situation. Of course, they do have a lot of cash. As we can see in 2015, 2016, 2017, they had well over 2 billion in cash. 2018, 3 billion. 2019, 3 billion. 2020, about 4.49 billion. So again, the company's not too bad in that sense. They do have a good amount of cash on hand. And the losses aren't that bad, though this company does need quite a bit of working capital, given how much they push out in marketing, production, development, and the operations and support. So after looking at all these figures, like the big question is, what's the valuation? Is it worth the $30 valuation, a 30 billion valuation that they put here? Or have they, or is this more of a company that's worth something less or more? Like, to be fair, I think it's actually worth more, because we're looking at a company that, in a sense, they dominate in what they do. If not for this year, they would have been continuously growing. So I would have seen them at close to 6 billion in revenue if this had probably been a normal year. So I would probably say this company will probably has more of a valuation of like 50 to 60 billion this year. So when this company comes onto the market, I probably expect it to go up 50% or even 100%. And that wouldn't be odd, like especially with all the hype built around this company. Like if the company comes on at a valuation of that, I would see the value going much higher. And just the company, just to compare it with, like that kind of does this whole do it yourself kind of like economy, where you sign up, you work the hours you want to do, you rent your rooms when you want to rent them. So it's very similar to Uber. Uber is at a 85 billion valuation, and I kind of see Airbnb getting to that probably next year. So even though it if it comes onto that at like 85 billion straight off this year, then I'm going to say it's going to be a bit too high for this year. But if it comes below like 60 billion, I'd say it's worth buying into and holding into next year because there's still some gains to be made. But if it comes on at too high a valuation, then of course there's not going to be much gains to be made and it's not going to be worth it. So we'll just have to see what the valuation is. So at 30 billion, the valuation's probably too low. Like in terms of how I perceive the value of this company. Of course, people might be a bit tougher on this company and go, you're in probably the worst shape of your life right now. Your, growth has decreased, but again, abnormal year. You gotta judge it for what it is. And I think next year it's the potential next year and the years afterwards are significantly better for this company anyway. So I'd probably give it like an Uber type valuation, and I'd see it very much in the 85 billion category. So yeah. Also, you got to consider that people have lost jobs, so all of a sudden they're running towards a whole, finding ways of how to make extra revenue. So you all of a sudden, if you had a job, you wouldn't have rented out your rooms. Now you would. Also, the economy's not doing well. You're probably not going to stay in your flashy hotels. You're going to find a cheaper cost, and you're probably going to look at Airbnb options as well. So I think that's the whole thing about it. So and also the Airbnb is most of the shareholding is still held by the three founders. So we can see Brian, Nathan, and Joseph, which was referred to as Brian, Nate, and Joe. And that story that we went through at the start. This little story here. So as we whereas I think like they did mention so we got like Nate, which was a software designer, joined Brian and Joe, who were just two designers at the very start, and hence we have the three founders, and they have about 14 to 15% shareholding each. So I do say these guys are highly invested in making this company a very, very successful company going forward. Other big shareholders is Sequoia Capital, which is a very big name in this field, and Founders Fund, which is run by Peter Thiel. So again, these two are also big investors. So I'd say I like the company and I like the investors, so it's something that's worth considering, of course. And as they've spent a lot of time in building the trust in their system. They built a review system. After a review stay, you've probably been in the internet enough to use enough reviews to know that they actually do matter, and having a review system works. Secure messaging and account protection, as you'd probably expect. Risk scoring is probably one thing that they really need to get right, because you don't really want people just coming in your property, especially a stranger, and you're going to have to trust them, and you're going to hope that they don't destroy anything or do anything bad. So we use predictive analytics and machine learning to evaluate hundreds of signals that help us flag and investigate fraudulent accounts, potential account takeovers, credit card fraud, or other suspicious activity. So you kind of get the idea. And secure payments, you would hope they would have something like that. That's probably, the most important for a company like this. The watchlist and background checks, again, yes, it is very important that they actually have these things in place so that the whole thing works. In business, if you don't have trust, you don't have anything. And that's true for a lot of things. Cleanliness in this kind of environment, cleanliness matters a lot, and they've kind of created an app to show property owners how they should be cleaning the properties, just to make sure it's hygienic for the next person coming to stay. And also fraud and scam protection. What I've actually found more interesting is the insurance and protections. Our host guarantee program protects hosts against property damage up to $1 million. We have introduced host protection insurance and experience protection insurance protection. which provides liability insurance of up to $1 million to protect our host against qualifying third-party claims for personal injury and property damage. So I think that's also one of the big ones. So firstly, you want to make sure the person coming into your home is someone you can trust, and also if they manage to do something bad on your property, you still have some protection. And I think this company has come a long way in kind of helping towards building towards that. And I think the minute they can solve these big problems, that's when the company becomes a much stronger and sustainable company for the long run. Before that, you kind of had all these problems where people take legal action against you. Company is in danger by being regulated, and it is in a sense being regulated because there's only like some zones where property's going to be rented out. But again, I don't think that's a big problem. Like, there is always going to be property that can be rented out. But I think it's the trust that the owners of the properties have to have in the system and in the people that come in and start renting the place. And it has to create a good experience. As they have put, there is like 4 million people listing close to 8 million properties out for, rent. So that's kind of proving the proof of concept that it works. There's 4 million people that place this trust in this company, and the growth itself is also showing that there's a lot of trust, and there's a lot of people that would try this, and especially in this environment where the economy is not as good, a lot of people have lost jobs. People will try these things where they try to offer these services, or in the sense of Airbnb, they're offering their property. Like with Uber, you would offer your car and drive people around. Airbnb, you offer your property, right? And also, like booking restrictions in an effort to reduce the number of potential unauthorized house party facilitated through our platform. We have implemented restrictions on certain local entire home bookings made by guests under the age of 25. So it seems, at the end of the day, it seems to be people who are under 25 or fewer than 3 positive reviews or more than 1 negative review. So that kind of makes sense. They've kind of thought about this, and they go, how do we place restrictions on people who might have caused trouble in the past, or how do we build a good reputation first of this person, that they actually have 3 positive stays before we actually go that this person's a proven good person to stay at other accommodation. We don't, if you've had a bad review, then potentially it's a red flag itself. Urgent safety line. We provide an urgent safety line that is available 24/7 in English to ensure our hosts and guests who experience safety issues while on a trip receive instant response. We have also a safety center built on our online products that provide hosts and guests with a single source of safety. Again, this is the company going, an extra step towards trying to help people out, particularly in a safety category. As you kind of imagine, if you live in the house and you rent out your room to someone, there's always some risk that's perceived, and that can happen. So it's always good to have this, and the caution is needed. As we kind of see with a lot of different like situations, particularly Uber, where people picked up people and they don't always end up in the place they need to be. We provide a 24/7 neighborhood support in English and an online portal that allows neighbors and community members to contact us with any issues related to Airbnb. So again, that's similar stuff. Guest refund policy. If a guest checks into a listing that does not meet our host standards, Airbnb may rebook the guest to a new listing of equal or greater value, or the guest will get 100% of their money back guaranteed. Again, this is, I think these features all highlight how much the company has, tried to fix all the problems that have, come up. And for that, they're a better company, right? The more problems they go through and the more problems that they can fix, it just makes them better, gives them a competitive, durable advantage over their competitors. Like anyone coming into this space is going to experience all these same problems, and these problems don't get fixed immediately. They do take time, and then also it's about building that trust. And I think Airbnb has done that over time. It's built trust. It's built ways to combat, fraud, or just a bad experience in general, and is also taking people's safety to a very, very high degree. So I think that's all I really wanted to go through of this company in terms of its background, its financials, what they've done to really improve this since they first founded it and became a company, and how far they've come. And I think, yeah, like the 30 billion valuation seems a bit low. I think it can be a bit higher once it opens in the market. We'll have to see what the pricing is. For me, it's always just see what it opens at. If it's worth it, go for it. If it's not, there's always other opportunities. Do not threat, There's always other opportunities. Let me know if there's any questions you have or any comments. I'm always interested to read those. Also, like and subscribe. That always helps a tremendous amount. If you've also made it to the end of this, which I think it's a very long video, congratulations and good work on you. Until then, good luck investing, everyone.